week as well. We've had this morning. This morning we've had obviously the Bank of Japan overnight. We've just had the Bank of England with their data out, and lots to talk about. And we've got the key weekly unemployment claims from the United States as well. The video seems a bit twitchy here for today for some reason. I don't know if it's all right at your end. I'm getting pixelated pictures here, so hopefully you can hear me loud and clear. Let me just excuse me. Let me share my screen. Let's do that the other way around, shall we? Let's just let me move that down here. So let's go to the currency of the moment, which is basically sterling. We've got a huge move here. Let me zoom this in to the 15-minute chart. So we had the Bank of England announcement here. This is cable. As the announcement came out, no change in voting, no change in the asset purchase facilities, all remain the same. But the thing that's really grabbed markets and sunk sterling so far today, cable here back under 129, is this announcement in the statement about negative interest rates. They've tampered with it before. Andrew Bailey's talked about it before, and it's all sort of been discounted. So however, it was clearly there. They're talking about the MPC speaking to the Bank of England about having to go to negative interest rates, something I never thought I would see in my lifetime, Bank of England with negative interest rates, but it looks like it's on the cards for 2021. You can understand where they're coming from. It really, it's the double whammy the Bank of England have got in particular. They've got this unknown Brexit outcome still. The UK government playing very, very hardball with regard to the EU negotiations, creating this, breaking of this withdrawal agreement, creating all sorts of pressure from both within their own internal party, the Tory party, and the opposition party about breaking this withdrawal agreement, breaking international law. The government are seeing it's an insurance policy, it's a necessary insurance policy, they're saying. So we'll see how it all pans out. But basically, the pressure has been on. Hello, hot forex, talking to myself. Excuse me. The pressure has been on sterling for a while after it recovered quite well in the last few weeks here. This is a dollar on the 15 minutes. If we take this up to the daily chart, you see what I'm talking about. We had this big rally here, and then we had this big collapse here as we rolled over at the beginning of September. As dollar got its feet back, cable came down quite significantly from this 134. We tested 128, so there's a 600 pip plus move down there in a few days, and then we bounced off this 127.50 low and recovered to test 130 just yesterday. It's the daily chart, so 3 strong days up, and we tested 130, say yesterday, and we're down again today on that negative interest rate. So although the statement was very central bank, and it was very, we'll do what we have to do, we won't to change anything until inflation's hit substantially, was the phrase they used again, at 2%. It's this talk of negative interest rates, and this is how markets react. This is what they do. They weren't really expecting that. It was a bit of a shock. Obviously, Andrew Bailey, now the governor, will probably be out. I don't know what he's going to say, but probably be out trying to say, look, it's in our toolbox. We're not going to use it. It's a phrase he's used before. But remember, there's big precedent here. We've obviously had the Riksbank, Sweden went negative. The Swiss National Bank have been negative. EU's negative. The Fed's at zero. So here we go. Yes, Kingsley, it's interesting you say about the guppy. It was a guppy I've just been writing a note about before I came on air here. And let me find my guppy chart. So here we have a huge move. Let me just take this to the daily. We'll get this in perspective. So here on the daily chart here, Kingsley, we've been recovering here. So a classic little 20-day moving average kept you on the right side. So here, this is the 1 hour chart, which is why there's so many lines on it. So actually, take all those horizontal, vertical lines off it, so it might clean it up a bit. Delete that one. Delete that one. Is that them all gone? Nearly. There's another one still lurking around. There we go. Delete that one. Close. So again, Why am I seeing these from YouTube? All these from Facebook. I don't know about my Facebook pages. Let's see the Facebook questions. For some reason I can't see questions on Facebook. So sorry, just bear with me a second. I can see myself, but I can't see the questions. Okay. So let's go back to here. Right, so Kingsley was asking about the guppy. So big rally up here. So let's have a look at this daily one. So the daily one broke the 20-day moving average here on this crossing EMA and rallied really, really, really nicely. Touched the 20-day here end of August, but bounced off it quite well. Nice big support there. Bounced off it, bounced into it, bounced off it, and then bounced off it. And off we go. We went here, we tested 143, and then we rolled over quite nicely. Big fractal high there, come down, and then 3 days later, we'd broken our 20-day moving average, and we've been moving down ever since. So here, from the 7th of September, we went short, or the system went short, this strategy went short, I should say. So if we zoom in, you can see what's happened recently. So a big move down, and we stalled here. We were stalling here at 136. This is the end of day. Remember, we can't make a comment really on this candle as an end of day trader until it's completed. But at the moment, we've tested low. So far, as of yesterday, before the Bank of England, before the Bank of Japan announced anything this morning, we were stalling here at 135. So we'd had this big move down from 143. It triggered short here around about 139.70. And so lots of pips on offer there as we've moved down. Still short. The 20 period's moving down. The 9 period, the 5 period, all nicely aligned, all moving down. Classic little trend lower. Bollinger Band's widening. See the top of the Bollinger Band's gone right off the chart there. Big wide mouth on the Bollinger Band. It's widened. The bottom band here is moving down really aggressively back through 134. The bottom of the lower Bollinger Band. So it's moving down. We stalled at 136, and then we've bashed through the key psychological 135 intraday. So Kingsley, I don't know what time frame you're talking about. Certainly the day has been short. And if we go down the time frames, the 4 hour has continued to be short, along with obviously the higher time frames in a bit. So again, that's another one that's moved down nicely, and then another big leg down in this current 4 hour candle. Remember, that's still got an hour to complete, but it's broken out of that range, waiting for the announcements from both banks. Sideways channel action there on the 4 hour time frame, and now we've moved down quite aggressively. So as the 1 hour time frame, again, that sideways action exaggerate for the last 3 or 4 days here through here. But because you can see the lows, the highs were getting lower. The lows with some support through that 136 area, I was talking about. And then here on the 1 hour time frame, big move. But again, the 1 hour traders, they would have been short here this morning from 4 o'clock trader, what am I trying to say, server time. As this low here from yesterday was broken here at 3 o'clock this morning, and then we retraced the tad, and then bang, we've moved down again. MACD nicely under the zero line. Histograms getting taller there. Stochastics have moved into the oversold area, but they've still got some pressure to the downside. RSI here 26 and falling, so into the oversold zone as well. So the oscillator is looking to be in an oversold condition, but very, very significant move because of the fundamental news that came in. So, Frank Freak is asking, what do you suggest me to get? I don't understand that question, Frank, my friend. Hi, everyone. What do you expect for gold today? Well, let's have a look at gold. Gold weakened yesterday as the dollar recovered from a strong Fed announcement yesterday. Who's asking about that? Wheel Deck. Gold, say yesterday we'd got to 1972. Yes, this is the 1 hour chart for gold through this key 50 Fibonacci level. I'll show you where that is in a minute. But 1972 we got to, and again bounced off it like we had on Tuesday. We bounced off it. Wednesday we bounced off it, and we've moved down Thursday and into S2. So we got support this morning again. It's tested 1935. We got a cap here at S1 at the moment. It's at 1947. So we're bouncing between those two on the intraday chart WeDeck, but obviously the pound announcement, it doesn't directly affect gold in that sense, but it just gives you another feeling for what the central banks are doing. And then the central banks are the things that are really driving, obviously, monetary policy at the moment, and have done for the last 10 or 12 years in particular. So gold tracked between S1 at 147 and S2 down here at 135. So trending lower again, very volatile over the last few days, as you might expect with the Fed last night. Again, that would have tracked lower there just after the Fed at 9 o'clock last night, 10 o'clock, and then it's legged down again. So so far, tracking here, it needs to move back over 1950 or 1949 WeDeck if it's going to move back up, because that's the 200-hour moving average, and it's coming down. The 20 hours coming to cross it again. Big, wide Bollinger Bands here on this 1 hour time frame. So key resistance there, 1949, S1 at 1947, and support, a bit extended support lower at 1937. So that's where gold sits today. And the higher time frames were still really very much in this channel on the daily time frame. For me, we got key support at 1920, a little bit of support above that 1930, and then the key psychological 1900 on the daily time frame but we need to break this 50 period moving at this 50 period Fibonacci level with some significance. Remember that from the 1 hour chart we just talked about at this 1970 level? Well, it's the 50 Fibonacci level, or the halfway between the big sell-off we had from the top here at 2075 to this low at 1865, when we sold off very aggressively a couple of weeks ago. In fact, 3 weeks ago now. Remember this day here, this Tuesday, 7% fall in one day, big fall for gold. And it's just been tracking sideways ever since, really, so waiting for a breakout. So they're the ranges we need to break out on the daily time frame. And we've just looked at the intraday caps here, that 200 period, and the S2 supporting. Where are we? Let's have a look. Lou Weston, will pound be strong? Well, the pound has been, it was a bit of a shock for sterling. If we go to all the pound crosses here, if I go to a different setup, we look at sterling. No, basically sterling has came across a bit of a shock here. Let me just move this to the window. So these are all the pound crosses. This is the Aussie, the CAD, the Swissy, yen, Kiwi. That's 4 hour. Let's bring it into the daily. This is cable here on the daily. That's a bit, let's zoom that in a bit. You can see basically sterling's under pressure, and this is the euro going in the opposite direction. Obviously, euro pound going to the upside. 93 it was tested a few days ago. We come off very aggressively, but today we're at 91.50. So you see, no, that's a weak. It's a weak response to the Bank of England from the fundamental data. That idea of the Bank of England will break precedent and go negative into 2021. So yeah, it's a weak pound. Same with you, Daniel. You can see again. Pick any of your sterling crosses. Obviously, the most popular one is these two here, the three popular ones here against the major crosses. So this is a daily. We were moving up quite nicely. 3 days up here. Let's make that 3 days up here. Monday, Tuesday, Wednesday, ran to the 50 period moving average though, couldn't get over 130, and then we're down today. So 4 hour will be down, fiddling with the 50 period. Again, that's looking down. It's now under the 20, into the underside of the Bollinger Band there, the 4 hour candle. But again, that's got another 45 minutes to complete. See where that finishes. And as we saw earlier, the 1 hour big shakeout from the rejection of 130 yesterday, having, big rally up from 128, 200 pip move this week, plus strong moves up, rejection as the dollar got some strength and we're moving down and quite aggressively. There may be some sort of bounce from that. Markets tend to overreact to the news. So again, as I say, the members of the board of the Bank of England and the MPC may be trying to say, look, we've got this ammunition, we've got this option of negative interest rates, but we're not going to use it, blah, blah, blah. The market does what it does. The market's reacted accordingly. Just the fact it's been talked about was enough to freak out the pound, and we're moving down. So there we go. Hello, sir. I hope you're well. Alan, I hope you're well, sir. Sean's asking, what's your take on the pound Kiwi on the 1 hour? Well, Kiwi got a whack this morning as well. Loads and loads of news this week. Kiwi got a whack because GDP came in at minus 12.2% for the quarter up to end of June in New Zealand. Remember, New Zealand, a very small population, but a very key currency and a key economy. It's a small economy, but very key because of its trade with China. It's a significant soft commodity producer, big exporter of things like milk powder and sheep products and wool, and a great place for tourists. Massive tourist industry relative to the size of its economy, and obviously that's all been stymied with the coronavirus. So they dealt with it quite well in New Zealand. They locked down very aggressively, and then all of a sudden, having had no incidences of the virus, it came back, and I think it was Auckland went into lockdown quite aggressively. So the economy suffered there. They're in a recession for the first time in 11 years. It's not a surprise with what's going on around the world. All economies are suffering a recession. It's just how long it's going to run for. I say it's first time in 11 years in New Zealand, and the Kiwi got hammered a bit this morning. Here against the pound, though, pound have been falling quite aggressively against the Kiwi. They had a nice trend. This is the daily time frame, but the 1 hour time frame is what you're talking about, Sean. And again, similar move. The pound had moved up all morning, all morning, I should say. Ran to this 200 hour, and then it's turned around. And the first signs of weakness was here. This is the 1 hour time frame. Remember, we've gone back under the 20 period moving average. We're at a key 192.85. I don't know why that line's on there, but it's obviously on there for a reason. Okay, at 192.85, it's there for a reason. And these amazing that these lines still come back to play, and that's what's happened today. So we've been going up, see resistance, bounced off it. Resistance broke through it, ran up, and then we ran and stalled at this area again. But then the news broke, and down we go. So that again is looking short. If you've been short sterling, you've bagged some pips. Don't get too greedy, but that's still running, isn't it? Where again, another one. But obviously, you expect this volatility to increase because the candles have got massive, and the Bollinger Bands have widened. So we're under what is S1 now here. That's the daily resistance level, first resistance level here, S1 at 1.9161, and there's a blue line there for some reason. Well, again, I don't know why, but maybe the support. Yeah, there we go. That's that blue line here, that 119.31. Clearly, the support of this channel here that we've been in all week. So we tested the weekly lows, not unsurprisingly. 4 hour time frame. There we go. That blue line, a bit more significant there for you, Sean. You see big support here. So if this area breaches here, we'll be going lower again. So we take that back up to the daily time frame. There we are. 1, 2, 3, 4, 5, 6 days testing just about where we are now, 191.30. And again, you see it's this low, this cluster of lows here back to July. And then below, if this breaches today, remember, we've had negative news for the Kiwi as well, so we may not. So we've got 191 round number, and then the next low takes us back to the close here on the what's this? Is the beginning of July. So that's our next support area, which was the bottom of this big downtrend. So that's an extended low. So there we go. S2 1.1957 is the next support level from this low here in July. So pressure still at the downside on all the dollar, all the sterling crosses because of the shock of the announcement. So let's have a look. Where are we? 20 minutes. We've got 10 minutes to the US data today as well. So let's have a look. What's Haffy saying? Haffy's saying can't drop more. Haffy, never say can't. Never say cannot. Cannot do. Don't do. Anything can happen. It can drop more. It might not drop more, but 135 for the guppy for pound yen is a very, very psychological level. But here we are. As I'm speaking, it's the daily time frame. We're under 135, and we're under it quite significantly. We're at 134.70. So never say never, my friends. Okay, the trend remains down. Yes, there's a huge candle. There will be some sort of reaction. We've already got to S3 today, but it was a big surprise. That was on normal trading days. That's how the S3 was created from previous days. So obviously before that, if we zoom in the 4 hour, you can see we've been fairly, actually let's go to the daily, we've been fairly moving down. So that, you know, we're in a bit of a range there. Can you see that range? That's the range from R3 at the top there, resistance 3 to S3 at the bottom here, 134.70, which is where we are now, based on this. This is obviously previous day's action. So S3 only gets hit about 3 or 4% of the time typically. But, you know, there's no bigger day for a currency than the central bank of that currency having something to say. And the Bank of England have shocked the markets a bit by talking about negative interest rates. So therefore, we get this exaggerated move. So it's not a surprise we've moved to S3. Obviously, these support and resistance areas will be very different tomorrow. So, Happy, my friend, never say never, my friend. It's on the way down. Pound CAD played on a lot today, sniped downward, sold, but a lot thought it will be a buy. Well, there we go. It's don't think, my friend, Mr. Willie, or whoever you're talking to. It's what moves down. Gold will still be a buy. Well, let's we've had a look at gold a minute ago. There's something new. Alfonso, the fundamental analysis of the pound said the pound rose as expected. Why did the price drop, really? The fundamental analysis of the pound said the pound rose as expected. I'm not quite sure what you mean there. There was no... Let me just take this back to the fundamentals, Alfonso. There's of all the currencies, sterling is probably under the biggest spotlight because of the Brexit situation, okay? And this surprise by the politicians in the UK by announcing this a new bill to try and give them what they're calling an insurance policy against the withdrawal agreement, which they just signed literally, a few months ago, literally weeks ago. But that's damaged potential credibility. But on the flip side, they have signed a deal with Japan. I mean, it's very, very similar to the one they've got within the EU now. It's not much, not an additional great deal of additional benefits. And obviously, trade with Japan has big climate change impacts as well, because obviously it needs to be flown to the UK or shipped to the UK in somehow. So that's it's a minor, it's a major economy. But they do have a deal with them. They haven't got a deal with anybody else. They're talking about obviously trying to get one with the US and lots of other countries, but they're losing an awful lot of deals that are already in place within the EU. But that's what the people of the UK voted for very narrowly, and that's what the government's trying to push through. So it's a big political headache, and the economic output on top of the pandemic issues have sunk very aggressively. So there's a real double whammy hanging over the UK. So sterling, throughout this Brexit process, the last 4 years plus before the vote, 5 years now, the pressure sterling has been under over the Brexit uncertainty since the vote as well has continued. So here against the guppy, it's continued to move down. So I don't know where you said the rose. I mean, yesterday it accrued sterling. If we go back to cable, it accrued yesterday because that was dollar weakening before the Fed made its announcement. The Fed came out less dovish than expected, and so the dollar got a bit of a rally. The dollar index rallied over 93.50. And the dollar got a bid. Equities came down. This is the big shock today is this negative interest rates being taken on by the Bank of England. Right, some more questions coming here. Can we place an active trade? I don't know what you mean, Collins. Is the pound move above to 125? I don't know. Ali, are you talking to me or are you talking to some of your friends that are here? I don't understand, my friend. Pound above. Well, cable. Let's have a look at cable. I'm not sure what you're talking about, my friend here. 128.80 at the moment. 125.50. Can it move down that low? Yeah. 125. I mean, if we take this up to the daily time frame, 125. This area here. It's a big psychological area. Always not always has been, but fives and zeros in trading terms are always those subconscious numbers that we robots, algorithms tend to accrue to. So 125 is a big round number. 120 is the next one, obviously below that, and they're two key areas for sterling. You hear about the big players talking about these round areas, these 125s, 130s, 120s, and that's what we've got with 125. We're still some way from that. Obviously, we've been playing with the next one above that in the last few days, haven't we? 130 and 135, which we never got to here on at the end of August, as sterling was coming back to life. End of August, and then we've had a wretched September if you're a bull, if you were long this market. But again, on the daily time frame, look at the daily time frame. It went under its 20-day moving average here on the 7th of September, and it's just continued to descend. Basically, it's bounced around about 128 on the daily, and it's bounced off that for the last 3 days. And now this bit of a shock, from the Bank of England has capped us at 130 yesterday and today. We capped at the 50-period moving average today. So the pressure really is probably downside, testing 128 again, and then perhaps 127.50. But first, we need to break 127.30 after that, which is our key 200-day moving average, and that's then is the fresh air to 125, Al. So that's where your 125.50 area comes in. So it's not impossible, certainly on these daily time frames and the weekly time frames. It's not we got to the weekly time frames, but obviously it's all about the time frames that you're trading. So all what I've talked about look at the weekly candle. It's still positive. 3 positive days, big negative day today, but as far as the weekly candle's concerned, with only 1 day to go, it's still a relative positive. But look where it's stalled. It's shot down last week, and we've stalled here at the 50-period moving average on the weekly time frame. These things happen all the time. Okay, so 125 certainly not out of the realms of possibility. And as obviously here on the weekly chart, it's much closer, isn't it? It's only about halfway. It's just here, isn't it, on that week? It doesn't look as far away, does it, on the weekly chart? So depending on your time frames, Al, it's certainly not out of the question, certainly. But it's obviously a long way to go before then. That's the daily time frame for cable, ladies and gentlemen, on that now. Now, where did I get to? Al, next was one. What is your take on euro pound? Well, euro pound has obviously moved in the opposite direction. It's moved up. Remember, euro pound was up to 93 not so long ago. So very strong recoveries. It's been tracking lower again. So again, one that tends to go sideways. It's not the most exciting, but we tracked lower with not a great deal of energy here. Through the mid to end of August, we've been sort of sideways here for most of the summer. Not really pushing much over 91, not pushing much below 90 or 89, and then we moved lower into the end of August and tested our 200-day moving average all the way down here at 87. Was it 87? Got to no 88.70. It was 87.70. It was 88.70. So, and then it's recovered. The big day was here when we breached both the 20-day moving average and the 50-day moving average on the 8th of. It's like the 8th of September, wasn't it? That's earlier this month. So big rally, strong euro. It was all to do with anticipation of the ECB. Remember the ECB had their announcement last week, and this shock from the UK announcing this withdrawal bill. So the euro benefited, sterling fell. We rallied to 93, rolled over, and then sterling's come back a bit this week. Again, 3 days down, and then the shock today. We've bounced up and we're at 190. We're at 91.64. Too early to say whether this is our new floor, but if yesterday's low was 91.09, so again, actually that's an interesting area. And we're coming up. So the new floor for me here is the round number is at .91. So .91 is our support, and you would expect that to perhaps take off from keep that support. Depending how the fallout from the Bank of England goes from here, and then again, obviously, depending on the political situation. We're less than a month from the big meeting within the EU, October the 15th, that deadline day for getting a trade deal with the UK. Remember, the UK government changed the goalpost by bringing in this with internal bill. Excuse me. And so the negotiations are being questioned quite significantly, but certainly that's moving up on has found support on the daily time frame, and obviously the 4-hour will have bounced quite significantly there at that 91, and the 1 hour very, very significantly off that 91 and off and running over its. So it may have just moved a bit too aggressive, but it had, as you can see, been moving down. But bit of a floor through here at 91 for euro pound. So does this mean that gold will go up? Let's have a look at gold again. Gold, I'm not sure what we're relating to, but gold, guys, took a whack yesterday from the positivity of the stronger move in the dollar. Let me get my head straight. Hang on. Let me bring up the commodities. And commodities this morning had all taken quite a hit. Palladium, platinum, copper, silver, all taken quite a big hit. Oil was also one of them. Let me just move that down. So let's just this is my commodity complex. So copper. So it's the daily ones. You can't really tell. So had moved down. Gold had moved down today. Silver had moved down. So you can see they're all moved down. Just ignore it. Platinum in particular today. Can't really see that. But let's have a look at the gold complex. Gold here. Yesterday I said once. We said earlier, Tobago, 1972 was a key area. It's a 50 Fibonacci level. And so this is the 4-hour move down into its 200-hour moving average there at 1937. That's where S2. So today we're sort of under the pivot point, under S1, under S2. At the rest of today, we've really been to it S1 and S2 on the 4-hour time frame. We've got the 1-hour time frame. That's a bit more sort of extended and a bit more exaggerated. So today we've been at the top of this S1 at 1947 and the floor here at 1937 breaking out. But as I said earlier, it needs to break over 1949, 1947, this top S1 and the 200-hour moving average. And now what is the falling 20-hour moving average. So it's bounced into that and it's bounced off and now we're moving back down again. So it's really channel bound at the moment. It's not doing anything. So we've been at the top, now we're on the way back down. Will we move any lower? It's difficult to tell on that setup, but we're certainly sort of bouncing sideways after the strong move after the Fed yesterday. I said sterling and yen announcements from the Bank of England, Bank of Japan don't really have that direct impact on the oil, on the gold price. Obviously, we've just had US permits and housing starts and the initial jobs claim. So let me just read out the data for you. So building permits missed expectations. We're expected to come in at just over 1.5 million. They've come in at 1.47, so it's not too bad a miss. Housing starts also under expectation, 1.478 million. They've come in at 1.416 million, so that's a bit more of a miss. So the starts in August missed by more. Well, actually, the permits were much lower down as well. But last month had been, they were much higher. They've been revised down as well for July, but still, that is still relatively strong. Housing starts, though, minus 5%. That's less significant from a data point. So a bit negative data there for the US. Building permits also negative. The key number has come in at 860,000. That's new initial jobs claims for week beginning ending the 11th of September. So 860,000 Americans applied for jobless claims this week. It's still a massive number. Remember, they changed the way the maths, the way they calculated to bring it down. Well, to bring it down, it brought it down under the key psychological 1 million. So it's coming at 860,000. It was expected to be around about 850,000, so it's not much more. But again, it's yet another expectation that's been missed. So the jobs, as I've been saying for weeks and weeks and weeks since this all kicked off back in December, unemployment is one of these big, sticky, horrible things, and it takes a long time for it to recover, if it does recover at all. Remember, the fiscal help from the government in the US, they haven't had a deal. They're arguing about it. The Democrats wanted $3 trillion. The Republicans just this week offered only 300 million. They're massively apart. Yesterday there was a compromise from some of the centrists on both sides, on both the Republican and the Democratic side. They came up with a sort of idea of about 1.5 trillion. And it received actually quite good response from the president. So that seems, a trillion plus looks like is what's going to get on the table. But at the moment, it's not on the table. So there's no extra help for the unemployed. There's a big worry about evictions spiking quite aggressively in the autumn and into the winter. Obviously, the other key thing that's focusing everyone in the United States is the election, which is now just over 6 weeks away. It's less than 7 weeks away. It's 6 weeks on Tuesday. And it's all to play for. Although Biden appears to be well ahead in the national polls. It's really the way the electoral college works in the US. It's some of these key swing states. But again, he's still to be holding off the president in some of these key swing states. Well, if you can believe the polls. Anyway, jobs, big problem. 860,000 new initial claims. The continuing claims are down to about 900,000, but the continuing that's the 4 week average. It remains under a million at 912,000. But the continuing claims was actually better, 12.628 million. If that's better, 12.62 million Americans have been unemployed for well over 4 weeks and longer than that in many cases. The other key data out of the US, the Philly Fed index came banging on expectations at 15. It was 17 last time, so there's no big surprise there. We had a big surprise earlier in the week from the Empire State out of New York. It's another key bit of data. So big data dump out of the US. Building permits weak, building starts and housing starts weaker. Initial jobs claims more or less in line at 860,000, but it's still, don't underestimate that number. It's a massive number. And continuing claim 12.6 million, the Philly Fed in line with expectations. And the other piece of data that's just come out at bottom of the hour has been the private payrolls in the United States coming at negative 205,000. Sorry, Canada, not the United States. Negative 205,000. It was expected to have crept up to close to a million at 900,000 from negative 500,000 last time. So that's a big number. So big hit in Canada by the looks of things. So the Canadian dollar, I would imagine, having a bit of a whack on that surprise number as well. And all for you, and not forgetting today as well in the big central banks or the big economy central banks. Remember, those of you watching or trading or doing any deals in South Africa, the South African Reserve Bank also have an interest rate announcement later on. I think it's in about half an hour at the top of the hour as well. So watch that one if you're a Rand trader. So let's have a look. Who's up next? Raja. Good afternoon to you, Raja. I hope you're well. US 100, please. 1 hour and 30 minutes. Well, equities yesterday got a fairly solid wrap from the Fed. So, and on the daily time frame, they remain under the 20-day moving average. And the 50-day moving average is really what lots and lots of players are watching. It's provided support so far, but it's under pressure, no question about that. So index charts, let's have a look. The NASDAQ for the 1 hour and the 30-minute. Let's have a look. USA 100, there we go, there's one. This is the daily, so let's drill down. He asked for the hour. So you can see here on the daily, let me zoom up. So remember, daily time frame sort of consolidating here, but playing with a 50-day, and it's under the 50-day moving average today. Obviously, we can't decide that today, but it's a down day so far for the USA 100 and all the equity markets in as well. So we were asking about the 30-minute, and actually, I might get a better. This isn't great for. We've got the NASDAQ and the different setup. Have I? Let's just do this. Let's do it on this one. Let's do it on one of my favourites. This is the Heiken Ashi candles. Okay, so these are different to normal candles, and these measure the average price. So let's just have a look at this. And I tend to trade. If I'm going to trade these, I tend to just flip my views as the colours change to keep it very, very simple, but also using the key thing of the lack of wicks. So that is short. Last 2 hours, NASDAQ short from a bit of a rally earlier. That would short here on this with this using this strategy there at 2 or 3 o'clock when I just started us talking. So that's gone short. It's gone down again. That's moving down. 30 minutes again. it's been short for 1, 2, 3, 4, 5. So 2.5 hours short, Raja, nothing to say otherwise, because, here on the 30-minute, just very, very simple chart this, we're below where we were yesterday. Look, this was not yesterday, this was this morning. So we've breached our low this morning at the moment. So that is still tracking lower on that particular setup. That's all I'm going to say. Follow the trend. This strategy is very simple. Change when the colour changes. Sounds a bit simplistic, but markets do what they do. Don't overcomplicate things, guys. Emmanuel, good afternoon to you, sir. Hope you're well. Anything I can help you with, please let me know. Wrestling TV. Hello, Wrestling TV. That can't be your real name. Come on, use your real name. Good afternoon, Jonathan. Please, will gold still buy? Depending on your time frame, Jonathan. We talked about gold earlier, didn't we? We talked about it a few times. I haven't got it here. Let's have a look. Let's go back to this one. It's again, as an end of day trader, I would guess. I don't know. You're waiting for things to happen. If you're a 1 hour trader, you went short with this. If you're a trend following strategist, strategy would, many would have gone short here yesterday, and you're probably still short, or you might have bounced off the bottom. If you've been trailing your stop loss down, you might have got out because it's around about there, but it's just sideways on the 1 hour time frame, Jonathan. I don't know what time frame you're trading up. If you go up to the daily time frame, this is the one that's of particular interest. You can see here you can see here we've come down really aggressive, and we're very much in this channel. So as I keep saying, everybody asks about gold. For me, we want to break certainly this 50 fractal here at 1970 and break it significantly, and then break the 61.8 at 1995. So they're the two areas I'm looking at. And then support sits at 1920 on the daily, and the big fat support at 1900 wraps. So sideways, wait, get a signal, see what happens. But there's plenty of action going on in the lower time frames. I've just showed you 4 hour move down. Again, following the rules, 4 hour cat traders would have gone short here this morning on the completion of this 1 hour candle. Moved into the 200 period 4 hour support level, which happens to be S2 support for the day, and bounced off it. But you've got certainly a certain amount of pips on there. MACD's negative, and as we just shown, the 1 hour candle moving down. 15 minute would have moved down and bounced up. So 15 minutes being down into this S2 level, bounced off it, ran out of steam, bounced off it, ran out of steam at S1 and bounced down. So again, you could have gone short here as that's rejected that. Short there, it's gone against you at the moment, but bit channel down there on that 15 minute gold trade. It's all about your time frames, Jonathan, and you trade the time frames, guys, that fit your personality, meet your expectations, your personality, your psychology. Watch my mindset and webinar where I talk about that all the time. Al, hello, you're back. Oh, you asked that before, sir. We talked about that. 2050. Gold, we just talked about photo. We just talked about gold being sideways action. This is gold on the 15 minute. You can see here, it's been sideways really as we've broken in under this big move down. It's bounced. Okay. So 15 minute move sideways. Again, depending on your time frame, my friend. Good job. Thank you, David. Good job to you. Hola, Frederico. Hello, my friend. Haven't seen you for a while. You were here quite regularly on our broadcast, but good morning to you, sir. I need the link to Star Trader. I don't know what Star Trader is. You need to learn to trade yourself is what you need to do. Following robots, guys, following EAs, following indicators, whatever. Understand yourself first and foremost, because once you understand what drives you and drives the markets don't change, remember? Prices go up, down, and sideways. That's all they do. Where am I? There. Up, down, side. They only do three things. So when it's going up, you would like to be going up with it, wouldn't you? When it's going down, you'd like to be going down with it. Keep it simple. Don't overcomplicate things. Yes, you can compute lots of things. Yes, you can. Computers are great at crunching numbers and finding, levels, and Fibonacci is great, and moving averages are great, and all that sort of good stuff. But understand yourself first and foremost if you want to move forward. Alfonso, what's your thoughts on the Nasdaq? It's been crashing for the past week, but yesterday after statement on dollar, it rose. It didn't rise. It closed down, Alfonso, my friend. Let's just go through this in the higher time frame. Let's just explain my thoughts on the USA 100. Right. Let's just go to the daily time frame. It's always, start, high or weaker. So what have we done? We've been grinding high. This is April. Up. Thank you very much. See how the 20-day moving average provided support on the way up. The angle, see how the angle steepened? That was our last big move up, and then that one was the same sort of angle there. This was trying to say, look at that, it's getting steeper. The Q2 results were better in July. We moved up through July, the end of July, the middle of July, the end of July, through into August. The thing about August rally, ladies and gentlemen, is the volumes are still low. Even in this crazy year that is 2020, still people in the key areas of the Northern Hemisphere, Tokyo, Europe, and North America, they're still going there summer holidays. They still have a break. So volumes naturally reduce in August. So we were rising on falling volumes in some of the key markets. The rise in the Nasdaq, remember, has been driven by the big FANG stocks, the 6-8 big technology stocks. Are wobbling any of those stocks, and as I've been saying for a while, the market could unwind very aggressively. We had this freak out high here. It's not freak out, but we ground up, and then we had the freak out sale. See how the panic day took out the previous 1, 2, 3, 4, 5, 6 days of the final rise. It was all engulfed and wiped out in one single day, and then it followed through. So for me as a trend following trader, a trend following sort of analyst, just because it's just the way I've always been, that was the first signal of a potentially, certainly the long position closing out, definitely, and a trigger on this particular setup on the daily time frame of opening short position, not a huge position. Don't jump in all at once. It's just, we're still in a massive uptrend. The weekly's still going up. See, the weekly is still going up at that point, and the monthly is certainly still going up. The monthly, we've had a shakeout this month, but the rest, that's the monthly time frame. That's still long, isn't it? But that's also a tweezer top, and a tweezer peak for that matter, on the monthly time frame. So anyway, going back to our daily time frame and answering your question, Alfonso. So that's been short for now. Let's count them together, guys. It's 10 days now. 1, 2, 3, 4, 5, 6, 7, 8, 9. 10 days under the key 20-day moving average, where we first got a suggestion of going short. And look at that. We haven't closed. Can you see that? See where my cursor is? That low of the day where we first triggered short, we haven't closed above that price at 11,537. We haven't been out of the money, guys that went short that day there, the 4th of September. Haven't been out of the money all that time. Yeah, it's come back to freak you out a bit after it had a big sell-off, and then it went down all the way down, and it came back. So we're 10 days now under the 20-day moving average, and it's moving lower. What was the big support, where lots of buying was coming in, and it still might happen. We can't. Don't predict, react. Wait till the market tells you what's going on. Look at what's happening today. But today isn't over, so we can't do anything. So we tested the 50-day moving average, closed under it. Next day we went lower, but we closed significantly above it. Next day we tested down to it, but we finished above it. Following day we traded through it and then closed below it. Next day we traded underneath it but closed above it. Then we went up. Then we went down yesterday. So we've topped out now, not only below where we got in on the 20-day moving average, but we've topped out this week here lower than we were last week. So this week's high sits there where R1 sits at 11,456. Not many numbers, but it's lower. Okay, and then look what's happening today. Can't decide what to do on an end of day basis today because it isn't finished. Everything could turn around. Still, it's still 40 minutes before the cash market opens in the US, but at the moment, the Nasdaq futures are under their 50-day moving average. They're under their S2 for the day here at 11,009, and we're testing 11,000. So Naturally, another big round number. Naturally, there will be probably some buys around 11,000, just because that is what happens. It's definitely. Oh, sorry, I didn't see all your question, Alfonso. Sorry, I didn't see what you. I don't know why I can't see all your. It doesn't show all your question, Alfonso. Alfonso, for everybody else, Alfonso's written. He's written here. That's why I didn't mix it. But yesterday, after a statement on the USD, it rose a few pips, but now it's retesting it. It certainly is going, shorter. So intraday, the 4-hour time frame, we retrace, and now 4 hours having moved up a tad. Again this morning we've gone short, or last night I should say, into close we've gone short, and it's been short all day. And the 1 hour crossing strategy give you a very signal, having drilled, like sort of drifted up, excuse me. That was a bit of a question, but certainly that one there, where it broke significantly under the 200-hour moving average, having done the 5 and 9 cross and under the 20-hour moving average. That was certainly the big one there this last night around 1800, because it broke the 200 period very significantly, and also the 50 period, which is out of alignment. So that's the one thing to think about. You got the 50, the 200, and then the 20. So they're mixed up. They're not actually trending at that point. What we've got now is them coming back into line a bit. So we've got the 20 moving down really aggressively. So we've now got them in alignment. We've now got and trending lower. So that was a key area there where it crossed the 200 period. And then the 20 crossed from above to below the 50 period. That's also suggested more weeks. And that's where we are now. So now we've got the 20, the 50, and the 200 now in alignment as we've trended. And that's what moving averages do when we're trending. When we're going sideways like we are here, they tend to get a bit mixed up. So from this initial cross here, remember that would have been actually your entry, but it was right above the 200. So again, small entry there, but follow through with some more positions of that, because we break the 200 period. That's the technical entry. But again, previously we'd seen, well, it hadn't broken under that 200 period, so it might have easily just bounced into that, and it wasn't perhaps worth taking, as that candle had already tested lower to under the 200 period and rejected it. We closed it above it, but that was certainly the big tick, that candle there at 1700 to 1800 on this 1 hour for the Nasdaq. So yes, Nasdaq moving down, as are the equity markets in general, as the dollar's improved. Next up is the GUI buy. Well, no, it's not, my friend. I don't know what time you put that on. It looked, again, I'm saying no, I can't say that. It depends on your time frame, let's have a look. Is it a buy? Well, 15 minutes certainly isn't a buy. It crossed lower here, this big sell-off, and it's moving down. It's under S1. Looks like it may have panned out. I don't know, 5 minutes. Is it 5 minutes a buy? Well, maybe. Sort of again, using the same strategy, we need to it's still not a buy on the 5 minute, because it hasn't broken over its 20 period moving average, or this S1 is probably find some resistance there, looking like it may be. Daily, certainly it's been weak, and it's under its 20-day moving average, so that's been weak for 1, 2, 3, 4, 5, 6, 7, 8, 9 days now, so no. And on the 1 hour today, messed around, down, up, and big sell in the last hour. So it's moving down as far as I can see on there. Just below my 5,000 on gold. Leo, my friend, I don't know if you're a lady or a young man. If that's your entire account, that's very unfortunate. Whatever trading you do, you have to have good risk management. The most important thing in trading is to manage your risk, minimize your risk, keep your losing trades small. Get experience with real money by all means. Get experience on demo accounts by all means as well. Beauty of demo account is you're not risking any money. The downside is your subconscious knows it's not real money, so you act differently. Because the fear and greed isn't really there, because it's paper money. But it's great for developing experience, developing understanding. Sorry, Alfonso, I missed your out. So Leo, if you want to send me an email at webinars@forex.com, we can get you, and certainly send you some education, some videos, some webinars. Keep watching me here. I'm here to help. The key thing about losing is we do it all the time. It's what traders do. You've just got to get used to it. It happens a lot, losing trades. The key thing is to keep them small. It's not the amount of losing trades. It's the size of them. Keep them small. Keep them always thinking percentages as well. Keep them, a few percent of your account. Again, I can't tell you what to do. I'm not allowed to tell you what to do, but these are just good practices, good common sense practices that, you read about any successful trader and they follow these sort of ideas in practice as well. If you want to follow, live traders, we've got our HF copy account, we've got our PAM accounts, follow live people doing live trades. So, Leo, send me an email. Webinars@hop4orex.com is probably the quickest way of getting hold of me. Okay. Alfonso, I think you've put another question in there, didn't you? You did indeed. Nasdaq is on a big retest zone under technical analysis, but current news suggests that it's about to be bearish. Any thoughts on this? Well, you've just seen what I thought technically and fundamentally, Alfonso. The 50-day moving average is key. We found dip buy, but it's forming a classic sell-off pattern as well in Wyckoff theory and lots of other theories as well, potentially. The caveat is it's a presidential year, and we're only halfway through September. There's still 2 big weeks of September to go. September is traditionally a very, very weak month for equity markets, volatile as well, but also technically weak. It's the worst month of the year in some calculations. And the 26th, I remember this from when I very first started trading myself years and years ago. The 26th of September is the worst trading day of the year for the FTSE 100. And I remember looking that up in a book. This book here, in fact. One of the very first trading books I bought. Where is he? There we are. David Schwartz Stock Market Handbook. And it's literally every single day of the year. And this is published in 1998, so one of the first books. I remember one of the very first things I read was the best and the worst of the year. Right at the front, isn't it? So there we go. Likelihood of a price rise. This is on the again. There's no. I'm not showing you anything that isn't true. This was true back in 1998, and I've kept records from then to now, and it hasn't really changed very much. So here. Saying likelihood of a price rise in September is only 54%. It's one of the worst ones. Actually, May is 59%, according to that. Best trading days of the year, June the 6th. There's 77% chance of the FTSE 100 rising on June the 6th. The worst trading days of the year, can you see that? There we are. Obviously, it's all online now. It's all on, got it everywhere. September the 26th. Chance of a price rise in the FTSE 100 on September the 26th, only 28%. So September is a weak month for markets, and October is also a weak month. But it's a presidential year, take it to be okay. But anyway, what we saying? Is scalping trading good for a newcomer? Joe Swart, you've got to trade, as I say all the time, you've got to trade the time frame. Let me put my ugly mug up a bit here. Talking stuff. You've got to trade the time frame that fits your personality, Joe. So if scalping is for you, i.e. you can cope with the changing your mind all the time, in and out, in and out, in and out. Yes, there's lots of benefits to scalping. You don't tend to hold trades very long. You don't get attached to them. You don't have any risk overnight because you tend to close all your trades at the end of the day or the end of your trading session. There's obviously downsides. Watch my webinar on scalping and scalping strategies. I'm going to do it again at the end of the month. So in a couple of weeks, I'll be doing the webinar again. So join me live and we'll go through it again there. But watch it on our website, scalping and scalping strategies. There's pros and cons to any type of approach. But as a newbie or an experienced trader or whatever, you trade the time frame that fits your personality. So you've got to find out what sort of person you are. And you know that better than anybody. So how do you manage risk? How do you manage losing streaks? How do you manage winning streaks? Because ironically, having 5 or 6 winning trades in a row, traditionally, and again, the data all shows this, can be more devastating to your account than having 5 or 6 losing trades in a row. Might sound a bit contrary, but it's the truth. Anyway, trade the time frame that fits yourself. That's all I'm going to say. Aussie CAD, there we go. We got another. So let's get rid of me. Aussie CAD, says Mr. Rejoice. Let's have a look at Aussie CAD. It's a new one. Thank you for that. It's quite nice to talk about different things. People put the same things up all the time. Aussie CAD. Let's have a look at the Australian dollar. Aussie this morning, again, I don't know what time frame you're talking about, Mr. Rejoice, but Aussie had some good jobs numbers this morning. This is Aussie CAD. This is the Aussie CAD on the 4-hour time frame. Let's take a look at the daily. So you can see the 4 hours up quite nicely over the 50 period, over the 20 period. That's been trending really nicely. We ran to 96.70. That looks things. 96.55's in there for some reason. There we go. 96.55. So that's a key resistance there. See, that goes back to here, back to the end of July, beginning of sorry, what we're talking about. No, it's August, end of August there. So 96.50 is key there. Again, put your time frames in, guys, and we can drill down into it. So actually, let's go to the daily. So the daily is been chopping around, hasn't it? But we're relatively long. We've sort of bounced that blue line, that 96.50, once, twice, triple top. Not really, but we see. You see the W shape forming. So key resistance at 96.55. We've had 1, 2, 3, 4, 5, 6, 7, 8. We're into our 9th consecutive day up. Doesn't happen very often, does it, on that one? Interestingly, excuse me. So here we are consolidating at highs, and what we've done here, we've rallied a big rally here from April all the way down here at 88, all the way up here to this 96.70. So we're chopping around this retrace. So let's zoom this in again. Somebody must have asked me about this the other day, so that's probably why this Fibonacci level's on. So from a high to a low, a big move down, so formed here, 94.20 is the top, it's the bottom, 97. 97 is the top, really. We're at the top end of this channel, so we're back over the 61.8. We need to break and close over 96.50 for this to keep going up. Which it looks like it may have stalled. So again, we may be stalling here like we did previously here at the end of July here. Interestingly, at the end of, isn't that interesting? End of July, end of August, we stalled at this area, and here we are, middle of September this time, testing this 96.70 level. So it looks like it's, so on the daily time frame, that's been long from the break here over the 20, so it's 1, 2, 3, 4, 5, 6, 7, 8, 9 days long over the 20-day moving average. 50 days down there, so nicely aligned again, moving up. 4 hour probably just a spiky, I guess, yes, spiky. 4 hours provided by the 50 period moving average, providing support and still to the upside, but still can't break that. So positive Aussie CAD, my friend. Daily 4 hour, 1 hour again, bit more choppy as you might expect, but again resistance. So again, if you know this is resistance, might be looking for some shorts there. That was a big, wicks up here. Couldn't get any higher. Then we followed through under the 20-day. So you got to follow through that. Bottom of the Bollinger Band, 200 hour. Thank you very much. Got some pips on that one. Big volatile one there, wasn't it? That was obviously the Fed. What was that? Was that the Fed? What was that? That was 4 o'clock this morning. So that was the Aussie news, and obviously the Canadian dollar is obviously impacted by OPEC Plus as well. OPEC Plus are meeting today, so that's a big impact on the oil price. But again, 4 hour trending higher and being over the is this the 1 hour? Yeah, the 1 hour. In fact, sorry, not the 4 hour. The 1 hour being positive since 11 o'clock this morning, when the 10-hour candle closed over the 50-day moving, 50 period moving average and the 20 period moving average. So we've been positive for the last 1, 2, 3, 4, 5, 6 hours. Aussie CAD on the 1 hour time frame. How long have I been prattling on for? Over an hour. I'll keep going till the questions run out, basically. So you keep asking, I'll stay. I'm happy to stay here, guys. Leo, trying to build back with proper risk management and strategy. Leo, send me an email. That's absolutely the right way, mate. Don't. The other thing when you have a losing run or a big loss like that, Leo, is how do I get my ugly mug up? There we go. Don't get too hung up about what you've lost. Okay, I know it's easy for me to say, but I've done it in the past myself, and all traders worth their salt will have done it as well. What you want to do is try and learn for it. Don't think the market owes you. Don't think the market owes you your 5,000 back or anything like that. Just learn from it. Try and lift the positive lessons from it. Why did it happen? Were you risking too much? Were you over trading? Were you, trading multiple time frames? Were you trading with a stop loss and a take profit? Did you know what you were doing? Were you comfortable? Or were you panicking? And that's why writing stuff down, having a journal about the trades not just the trades you take, but how you feel and how what else is going on in your head. Watch my mindset webinar. I talk about it for over an hour and so on that as well. So have a look at that, Leo, and I'm here to help. Okay, so send me an email at webinars@hotforex.com and we can talk about that all the time. Again, Leo, what have I just said? I'm not saying do anything. I'm not saying buy gold. If you've been listening to me today, gold for me is really just tracking sideways on the daily time frame. Intraday, it's moved down today and yesterday as the dollar improved in particular. No problem, my friend. Absolutely no problem. George, rand against the yen. That's interesting. Let's have a look. I don't know if any of my South African friends have the central bank should have made an announcement in the last. My internet's going slow for some reason. What's the central bank done? Where are we? Friday, I'm on the wrong day. That's why. Looks like they've kept things. No, perhaps I haven't announced anything. I can't. Interest rate decision. I don't know if it was due at 4 o'clock. I thought due at 4 o'clock my time, but it's now. So my calendar's now saying nothing's happened. So I don't know if anybody in South Africa can tell me. Anybody? I haven't got a news stream here. I haven't got a Reuters terminal on my Bloomberg TV on here at the moment because I'm on here. So I don't know what's gone on there. Where am I? I'm here. I'm moving on. Right, get rid of me. Let's bring that back up. So rand against the yen. I certainly haven't got that on my. So I'm going to have to create a new chart for that. I don't know if I've got it here, to be honest. If not, George, again, send me an email and I'll do some analysis offline. There it is. I've got it here. I didn't think I had. Let me just stick the template we've been talking about today. So this is rand against the yen, which is what George has asked for. He hasn't actually said a time frame, George. Any particular time frame, George? George, breakout. You're talking about gold later on, George. Okay. Rand, yen, repeat the... Leo, sorry, the email is webinars@hotforex.com. Leo, webinars, WEBINARS, webinars at hotforex, which is where you are now, hotforex, HOTFOREX.com. Just put my name on it and the support guys will get it to me. Honestly, it's the quickest way of getting hold of me, okay? And that goes for any of you out there. Please email me. Any questions? We're here to help, my friends. Here to help. So, George was asking about the rand against the yen. So, let's start with the daily time frame. What's going on? Well, we've been going up, we've been going down, we've been going up, we've been going down, we've been going up. So, we're currently in a bit of an uptrend, but we haven't got as high as our previous high. So, look at that. That's nice, isn't it? Look at that. So we got bush, and we haven't got to bush so far. Look at that. You think I was made this up? I think people think, George, you're a plant. You've created a nice little chart for me. But no, I don't think George and I have we met before, George? I don't think we have we? But there we go. Look at that. 1, 2, and triple top potentially. But again, it's not really triple top. Whoops. But just trending quite nicely, this one. So for me, again, as an end of day trend follower, we were short. We would have been short sort of there. That was when it first crossed, yeah, but we hadn't. That was a bit of a worry. That would have we've added some there as we'd gone under that low there. We tracked that down. We'd have got out there as it's gone back over the 9 period moving average. So we've got most of that moved down. Thanks very much. And then we would have gone, ZAR yen traders following this strategy would have gone long there as we've gone back over the 20-day moving average on the 21st of August. And you remain long rand yen traders at the moment because we're going to try and test this 6.484, which is the top of the Bollinger Band and the 200-day moving average. And it's right between R1 and R2. So classic. Just hang on in there, George. I don't know what time frame you're trading, my friend, but that seems to be going up. Obviously, the Reserve Bank South Africa might have something to say about that. But obviously, we've had the yen, the Bank of Japan today, and we've had 4 strong days up. Interestingly for me, obviously, we've broken over, not just me, but anybody that's trading this. See, we've broken over this key 6.38 area, which is our previous resistance. Couldn't break it, broke it, came back to it today. So that might be our high. We don't know that yet, but that's still long. We're over the 5. This is the faster moving average. So that's the 5-period moving average. So that's the average of the price over the last 5 days, and it's down there, and we're above it. The yellow one is the 9-period moving average, and see how they've been parallel, nicely tracking up, stalled sideways, but tracking up. They didn't cross at all. They crossed back here, and that's our indicator, and we've been well supported. But the slower of the 3 moving averages, the 20-period moving average, provided nice support there for 1, 2, 3, 4 days, and off we went again, that break there. So that remains long, George, my friend, on that setup. Leo, I hope you got it that final time. Sorry, you put that question in as well. George again is gold is in a triangle shape. Wait for the blackout. I mean, I think you mean breakout. Yeah. Wait for the blackout. Yeah. Well, if you're in South Africa, I know what you mean by blackouts. Those what do they call it? Eskom. They're load shedding, isn't it? Load shedding's going on. Yeah. Breakout. You're right, George. Again, yeah. It's different ways of interpreting the same chart. Lots of people have been talking about triangles on different time frames. Andrea on our website wrote about the triangle on the gold chart, but certainly let me just explain what George is looking at for other people here when he talks about his triangle breakout. If we where are we? Daily zoom in. Hang on, it's the wrong chart. That's cable. That's why it doesn't look like the gold chart, because it isn't. Make sure, that's the other thing, you know, you talk about stakes and risks of trade. Make sure, you're looking at the right chart that you're talking about when you're live on the air like I am now, or when you're about to place a trade. Make sure it's the right asset you wanted to trade. Many times, well, not many times, but a number of times, I've definitely placed the wrong trade, or the right trade on the wrong asset. But anyway, so what George is talking about here, and correct me if I'm wrong, George, is this sort of triangle shape here that we've had. So we've got this lower trend lower here, and we've got this immediate sort of triangle here, looking for the breakout. But on the wider angles, not just this big shakeout, but here from these lows earlier on, there's a bigger triangle as well. I'm rubbish at drawing trend lines, which is why they're not quite often on my charts there. But that is another, you could say a triangle. So the idea with triangles is the distance, this parameter here, the flat side, that could be the move. So when we break our triangle, that is quite often the target that pennant traders, flag traders are looking for, the flagpole as well, as we call it. So that's another one, a way of interpreting the same thing I'm talking about. What I'm looking at is the flat support and resistance levels. Remember, with technical analysis and with any other analysis, it's just an opinion. It's just a series of ideas. That's the triangle approach I've been talking about earlier today. I'm going to take those off there. I've been talking about the flat support and resistance areas. Find what works for you, guys. There's lots and lots of ways of skinning a trading career. Many people just concentrate on pure price action. They don't have any of these lines. They don't have any of these moving averages, indicators. They think they're all lagging. They think they're all late. And there's an argument that they are. There's no problem. I've got a problem with that. But find what works for you. The pure price action traders will say it's all in the price. Whatever the news is that's been announced today for cable. Let's go back to cable because it's it's the chart of the day really. Whatever the news is that's been announced, it's all in the price action. The price is reacted to the news. They don't care what the news is. All they see is a great big candle that's gone go boomf, and it's triggered their systems. And that's one of the reasons trading robots get things wrong so much and generate lots and lots of trades. Not necessarily lots and lots of profits, because they're just reacting to the news. The trading robot does have no idea what's caused that 15-minute candle there, that huge candle, but it will have reacted one way or another to whatever it's been programmed to do. Obviously, some more weakness as it reacted, and so that's what happens. Anyway, gold. We talked about gold, Leo. I'm not going to talk about it again if you don't mind. Wash hands. Wash hands. Dennis, my friend. Alicia, wash hands. I'm not quite sure what you mean. Me wash hands? Am I touching my face? Yeah, fair enough. Euro NOK, Samir. I don't know the last time I looked at the Norwegian crown, but let's have a look at Euro NOK. We're going to look at these. I love these different ones. See what happens. Now, you would argue, again, just fundamentally, the euro's been quite strong. You would expect the crown, NOK is the Norwegian crown, to have been under pressure because of the weakening oil price. But let's have a look. Time frame, my friend, Samir. Time frame for the NOK. Let's have a look. There it is as well, Euro NOK. That's just how interesting. Two assets are actually on my first choice Forex slide. But let's put the same template on we've been using all day. Which one? This one here, isn't it? Intraday crossing. So Euro against the Norwegian crown. What's going on? Time frame, Samir. Well, let's have a look. Daily, sideways, channel bound. Big sideways action for the last 1, 2, 3, 4 days. Not a lot going on there. Supported by the 200-day, moving up. If I zoom in a bit. Last few days have been relatively strong, but sort of topping out at 10.75, 10.75. So so let's have a look at that for me. So for me, that's really the pivot point there. Yeah, 10.76, 10. I don't know, let's call it 1080 for the sake of round numbers. Oh, I need a cup of coffee, guys. My voice is going. I've only got water here in my horrible little plastic cup. I brought it up from the pool earlier. So there we go. We got this top here around 1080. Can you see that on the black chart? I don't know if you can see that very well. Let me make that big, thick number object list. Let's make that big, thick line so you can see that. So that's our resistance for today, yesterday, what's that, Tuesday, Monday we'd been over it a bit, Friday we come crashing down at Euro, given up a bit. So that's our resistance this week, basically. What am I talking about this week? This is the daily time frame. What am I talking about? So we haven't been able to top this. This is August, July and June we were over this 1080 zone, okay? So it's ticking up on the daily time frame. Let's zoom this up a bit. So again, another one. Again, follow the rules. Doesn't matter what the asset is. That would have triggered a long position on the 3rd of September, Samir. Big follow through here on the 8th. But again, touching this high from July and then it's come back down. But again, that's still well bid. We're over the 20 period. We're over the 200, and that's still bid for me. That's still positive on the time frame, Samir. You said daily, so there we go. Obviously, it's already touched this 1080. I've put that a bit high, haven't I? But 1080 is the top of the resistance zone. Remember, these support resistance areas are not exact. Nothing's exact in trading. Get a bit of a feel. You can see here. That high was a bit lower. That came in at 10.75, and that's a 1080. So again, those round numbers again, the 5s and the 0s coming into play again. So our high here from July is really sort of through here, isn't it? We can get over that. So that's our resistance zone. So we're in there and we came down that day. So we tested it today. Interesting, we tested it today. So wait and see where we finish today. We might end up in here, or it might be a short position on the lower time frame. So we've already on the day. That's our daily resistance zone. So if we drill down the time zones, we see these yellow lines. In it for a couple of candles, then down. I haven't got to it today. 1 hour time frame. If you zoom in the 1 hour time frame, we didn't even get to these 75s this week. So, but we got closer to it. So the lower the time frame, you bring these lower support in. But we've tested it today, so that see that might be a shorting position. I'm not saying go short on this, What I'm saying is we've tested the first lower zone on this one big, strong 1 hour candle, and there may be some resistance. But remember, the size of candle matters. Okay, 98% of the time, the size of the candle matters. So we've had a big down candle there, and we moved down. We've had a big candle up candle now, maybe a bit of retrace and moving up. Big down candle there, we moved down. Big up candle there, it didn't happen, didn't work. Up candle didn't happen, it got counteracted by another big down candle. Then we went down. Big down candle, then we went down. Big up candle, we followed through. Size matters with candles, and it plays out. So most of the time. Okay, so that's my view. That 1075, 1080 areas. The key one, the daily, still looks pretty robust, my friend. I don't know when you got in to this or you've just seen this today or something, but that's, again, using this strategy, it first triggered long here, and off we go. And, I use the ATR to generate targets, but there we go. Somebody's put on there, thank you, that's probably one of my colleagues listening to me. Webinars at hotforex.com, guys. If you want to call me. If you want to email me or any of us, send it to here. My friend, webinars at hotforex.com. I hope Leo got that early. I'm sure he did. Mr. Raja, Cillian Raja, dollar yen. Again, this was a currency that's very much in play. I haven't talked about it today. I should have talked about it a bit more with what's going on in Japan and obviously with the Fed. So two of the three biggest economies in the world both had their central bank announcements. The most significant thing that can affect a currency is a central bank announcement. And the Fed did it yesterday. The yen did it this morning. And what's the outcome? Well, what is the outcome? You tell me, guys. What is the outcome? Somebody tell me, what is the outcome for the announcements from the Fed and the Bank of Japan, the new Prime Minister in Japan, the election in the United States? What's the trend on the dollar yen? On a daily time frame, it's not. It hadn't been doing very much, but this week it's all got a bit negative, hasn't it, for the dollar? We've broken out of this level. We've broken under 106. We're under 107. If we zoom in on the weekly time frame, we're at some mega weak lows at the moment. There's today and tomorrow before this weekly candle closes. But look at that; it's a very negative candle. And again, using this crossing strategy, it looked like we were going to go long this week, because we'd had 3 weeks up, then a big week up, got us in there, and immediately we were stopped out the following week and reversed and went short immediately here. Back at the beginning of June for end of week traders, they've been short dollar yen from all the way up there at 107.42, having rejected the top of the channel at 109. So that's been trending lower. The daily been moving down very significantly this week in particular. Here's Thursday. And this was Monday, so last week we were sliding sideways ahead of the Fed and the Bank of Japan, sliding sideways, pivoting through 106, couldn't really decide where to go for a week or so. This was August, we got a bit higher, we got to 107, didn't want to go under 105.50, but that's a big test, and now here we are under 105. 105 is a massive psychological number for dollar yen. Below that is, the 100 itself, 100. We didn't get down to that when we were selling off before, 102, 103, but 105 is a big psychological area. You might expect some support and some buys down here like we had last time. And if I zoom in, most of the times when we get to this 105 zone, this is 105 here now, guys. So we got, we smashed through it here in the hiatus that was March, and we went all the way down to 101. Intraday, we couldn't close below 102.20, so that's the big line in the sand. But as you can see, the volatility and the panic and the worry over the pandemic took us all the way down there. Big fresh air there on 2 or 3 days. So the sort of general support is around about this zone, 105.50, 105, which is where we are already. So we're in this sort of support zone from March where we are now. So you could expect, some buying here and this to recover from here. But at the moment, as a trend following trader, certainly your 4-hour trend has been down all week. Thanks very much. Your 1-hour trader has been down again all week, lower bit over closed out, short, out, short again this morning, and moved down under 105.50 and now under 105. So don't get too greedy, but there's lots of pips being offered on there, and the trend remains to the downside. But 105 might see some support. The new Prime Minister, Mr. Suga, in Japan, has talked about the yen. Doesn't like a strong yen. Big exporting country, Japan, obviously, so makes their exports much more difficult to get sorted out. So there we go. Raja, that's my thoughts on yen on those multiple time frames. We're getting really tight now, guys, if you don't mind. This is one of the reasons why Hot Forex is always going to be my broker. Emmanuel, thank you for your very kind comments, my friend. We're here to help, my friend. That's very nice. Tell your friends, tell your colleagues, tell your about Hot Forex. Very good. Breakout, yes, I know what you meant, Avas. It's Avas, that's okay. Samir, it's not a problem. George, thanks. I'm from Zambia. I've never been to Zambia, George. Beautiful country by all accounts. My uncle, he wasn't a real uncle, he was a friend of my dad. He spent a few years in Zambia in the early 70s. Fascinating stories from Zambia. Big, wide open plains. So, best of luck, my friend, and take care, everybody. I think George, is that the last comment? Yeah, George's is the last comment. So we'll finish with Zambia. Unless obviously there's anything else anybody wants to talk about. I am really running out of steam now. My voice is going. So let's just go back to the main pairs and see what's going on since we've been chatting on. So let's just go back to the intraday stuff. So Euro, remember, big day today. We've had, last night we had the Fed, perhaps not as dovish as expected. We had the stock market selling off. We had a stronger dollar index went over 90, held over 93, went to 95, 93.50. And so Euro weakened into close. It's weakened again this morning, all the way down here, 117.35 this morning, and we recovered to 118. So Euro, dollar pivoting over 118 at the moment. Again, crossing strategy would have taken you long a few hours ago, but it doesn't. It seems to be ticking up here, but you're not really in the money on that one. Dollar yen, we just talked about intraday. We've had the Bank of Japan this morning. No change from the Bank of Japan. No expectations of anything really coming out of the Bank of Japan. But more stimulus, certainly. They'll do what they need to do. Negative interest rates, obviously, in Japan already, and has been for a while, one of the first exponents of it, along with Sweden and Switzerland. But yen, very strong here. Dollar yen, in particular, down, I say, under the key 105. And as low as, in fact, 104.50 today. So another 100 pips from where we were pivoting through yesterday. So dollar yen weak. Sterling, we've already talked about. We talked endlessly. Big sell-off from the Bank of England, talking about negative interest rates, being in the toolbox, not even saying they're going to use it or suggesting they're not going to use it. I'm pretty expect. But the big sell-off followed through the following hour, and we're sort of, under 129 now. But on the whole scheme of things, relatively okay. In the if we take this up to the daily time frame, had a huge 600 pip sell-off, and we've bounced this week, and still for the week we're still positive. So, the daily 20-day moving average is all the way up there, 131. So that's still short for me. Cable, the Aussie. We're pivoting through 72 earlier. We found some support, 72.50, and we got 73. We're pivoting through today. Capped at the pivot point at 73.10, and then we've moved back down in the last hour or so. CAD, I talked about CAD earlier. We didn't actually have a look at it, did we? Because it had some weak CAD data earlier. So CAD pitching through 132. So what was resistance earlier in the week? This is the 1 hour time frame. So here, Friday we couldn't get over 132. Monday, even weaker. Tuesday we had a bit of a run at it. Wednesday we slipped down from it, and we went all the way down to 131.25 as the Fed was announcing things. Not sure what was going on, and then we rallied really aggressively through 132. Up to 132.50, but then we've come back down, back under 132 earlier, and now back up again as the US market opens holding up. So oil playing out. I haven't actually looked at oil. Have we? Nobody's asked about oil, interestingly. Swissy, nobody asked about the Swiss franc. Swiss franc is it's been a really, really good trader recently. Again, look at these movements after the Fed yesterday. This was the Fed announcement in this hour. So down here at 90.50, all the way up to 91.30. So 100 pip move on the Swiss franc is a big old move. And again, at the daily time frame, it's been an absolute classic and joy to trade as a trend following trader. Sideways, trend, sideways, trend, sideways, and air into the downside. So we're very much sort of boxing at the lows here between 90 and 91 for dollar Swiss traders. Oil, I mentioned it all. Oil still holding up quite well. This is the 1 hour time frame. We're back over $40 earlier. So some positive news from OPEC Plus. OPEC Plus a meeting today. Some announcements. So they're holding the price up. So the continuing recovery. Actually, let me zoom this up a bit. You can see we ground up and now we sold off really aggressively, but we've come back quite aggressively as well. So for any oil traders, look what our Fibonacci friend is telling us. From our height there at 43.80, our low, intraday low, around $36. Next resistance is there, that $41, the 61 Fibonacci and an R1, so big resistance there. First, we've got to get over the 200. This is the one, the 200-day moving average, which now sits at 40.32. Remember, we were over it for a number of days, came crashing through it, so we'll come back quite aggressively as well. But big resistance initially here, 40.30, 40.50, and then the 61 fib and the psychological $41 for oil going higher. Supremely says, thank you very much. Well, thank you very much for being here. Time, we've all got the same time in the day, ladies and gentlemen. So thank you for your time. And I'll finish with the most important stock market in the world, which is the USA 500. This is our futures CFD contract on the 1 hour time frame. And again, let me just leave you with the the daily time frame of my thoughts. Here we are, 10 days under the 20-day moving average, and today we're pitching and trading under the 50-day moving average intraday. We've had a weak day today, and as I said before, we couldn't get back over this resistance, our pivot point. So, are we going to see a big leg down here? We shall see. But remember, keep it all in perspective. We've had one hell of a recovery from these depths here at the nadir of the pandemic here in the end of March, and rallied massively, massive rally, new all-time highs from these February highs here at 33.86, and that's sort of where we are now. That purple line there, if we zoom out again, that purple line here, this is that 100 point here, that's that 3386, that was that all-time high from February, which we took a while to break as we were going up. So it became resistance. 1, 2, 3, 4, 5. 6th day we broke over it. 7th day we closed back under it. 8th day we were back over it. 9th day, now we gapped through on the 10th day. So 10 days to really break it properly. So we touched it, breached it, broke it, and then breached it eventually. Rallied aggressively, like I said before, and then sold off quite aggressively as well. That engulfing candle moved us down, breached the 20-day, and now the support sits at the 50-day. So we've only yet to close under our 50-day moving average in the sell-off, or the retrace, depends what you call it. But certainly 20-day moving average traders are short and waiting to see if this 50-day moving average actually holds or breaks. Now, wait. Patience is key. So thank you very much, everyone. There's no more questions. I want to call it a day. Go and get a cup of coffee. So just quick recap of the data. The jobs data, the key unemployment claims worse than expected, but only 10,000 worse than expected, but still a huge number at 860,000. The South African Reserve Bank have left interest rates at 3.5% and haven't cut them or moved them up. That was what the market was expecting. There's some other consumer price data as well out of South Africa today as well. I can't see it here. But no, the South African Reserve Bank have left interest rates the same as well. As far as the US data is concerned, I say the continuing claims came down under 13 million at 12.6 million. Still a huge number. The building permits and the housing starts are all worse than expected. and weaker than expected. And the ADP, the private payroll number in Canada, was also much worse than expected. Came in at a minus 205,000 when the market was expecting the positive 900,000. So over 1 million variance from the expectations. So as I say, thank you very much, everyone. We'll see you all again next time. And trade carefully, and always manage your risks. So take care, everyone. All the best. Bye-bye.